Hi, I'm Adam,
This is Kevin.
and we are Tech Guys Who Invest. This is the place for business people and investors to learn all about investing. We offer a fresh perspective on what it's like to have a day job while investing, and we share lessons learned on our investing journey. Our vision is to educate and entertain you while adding tons of value to your daily commute. Welcome to our show. Hey, everybody. Welcome to this episode of Tech Guys Who Invest.
What's going on, everybody? Now, do you remember the saying that maybe your parents would ask you this, that if all of your friends jumped off a bridge, would you? And I remember that because,
saying,
yeah, right. You're saying, oh, well, they're doing it. Why can't I do it? Right. And the retort or rebuttal was always that. Would you
Right.
jump off a bridge if everybody else was doing it? Knowing that jumping off a bridge could end your life. And what we're talking about today is that mentality of following the herd and analyzing a bit more, maybe trying to think about why people are following the herd when it comes to investing, such as investing in a 401k or quote unquote saving for retirement. All of those things. We're just kind of going to talk about that, give our thoughts on it as well.
Yeah, so we'll start off by talking about what it means to break away from the herd and why people don't do that, why people stick with the herd, even if they're jumping off a bridge or running over the cliff. And one of the reasons we see that happening is because it's scary to break away from the herd. There is a perceived security. And in a lot of cases, such as the one we're talking about with investing, it's a false sense of security, but it feels very real. And so people are afraid to depart from what everyone else is doing.
Yeah. And I think it's interesting because I've heard the argument that real estate is complicated. But if you try to, I think stocks and investing in the 401k, if you really tried to do the research and dive into it, I got more confused trying to do all that than learning about real estate.
Yeah.
I feel that there's also more people trying to break real estate down in its simplest and purest form and fashion than there are the other stuff like stocks and 401ks and mutual funds.
Well, it's interesting. It certainly has grown in popularity, which is a good thing. And technology, especially technology and information that's accessible via the internet, has really helped more and more people access real estate investing. But there's still the overwhelming majority of people who have misconceptions about it or let themselves be stopped from further educating themselves by either the excuse you mentioned or others. And what we hear all the time is real estate investing is risky.
Yeah. And why do you think people say that, Adam?
I think they say that because they don't understand it. If you talk to anyone who does understand it, they don't see it as risky at all. For example, you don't think real estate's risky.
No, I don't.
I don't think it's risky. All of our real estate investing buddies don't think it's risky. They think investing, quote, investing in the stock market is way riskier.
Yeah. You have to ask yourself what type of control you're looking for. Another thing is also with the 401ks, how is that any less risky than investing in real estate?
Yeah, to me, you mentioned it. You really got to the core of it and why it's not risky and why quote unquote investing in mutual funds in a 401k is risky. Control. When
Yeah.
you invest in real estate, as long as you are educated, you have much more control over the deal and management of the asset. But in mutual funds, you have almost no control. In fact, you can't even get your money out of it in a lot of cases. For example, if it's in a 401k, like the situation you were explaining on one of our most recent shows where you couldn't get your money.
I couldn't. It's not really your money, which is what I learned the hard way. And it's absolutely frustrating that that's the case. And you touched on education, which I think is very important. There's an idea of being intentional and purposeful when it comes to investing. And that's what I've noticed with the people that we've networked with, people we've met that are on this journey to financial freedom, or even just trying to build financial security. There is an intentionality. I'm not sure if that's actually a word, but my point being is there's a direct mindset where they're trying to control things. So they'll get educated. And that is what ultimately you should be doing anyway, not this passive, like, I'm just going to put money in and whatever happens, happens.
Yeah, because it sort of happens to you in that sense. And if you are in control and you are owning it, you are the one who is responsible and accountable, and you benefit from the results of what happens in that situation. It definitely takes more work, and it is scarier, especially at first when you're still learning. But at the end of the day, it is much better for you in terms of security. And the other thing about it is a path to true freedom and to true financial security. So, what's that saying you really like, Kevin?
I like to say that you can't save yourself, you can't save your way to financial security, you can't save your way to financial freedom. And then I also like to say that investing is the single greatest action you can take when it comes to controlling your financial success, or even moving towards the progress of your financial freedom.
Yeah, I completely agree, and we're both living proof of this. For me personally, once I began to educate myself and then actually took action and bought my first rental property, is when that started to manifest itself for me. And now looking back on that, and even as I continue to grow, continue to learn, and get more sophisticated, I I still recognize that that was a very pivotal moment, and when I truly began to take control of my financial future. And it just feels great.
What I've come to learn is that investing seems riskier, but I would argue that saving with no intention of investing is riskier than actually investing. And the reason I say that is because if you have even a high yielding savings account, you are losing money due to inflation. And yes, you could make the argument that you wouldn't lose it all, but you're also not making anything. And when you're investing, which we advocate to invest in education first and then figuring out where you want to go. So that's the first caveat is when you invest, know as best you can what you're getting into. Also note there is an inherent risk in everything, but there's also a risk that you are going to make more money than just saving it. So I think just purely saving is way riskier than investing.
I couldn't agree more. And even Robert Kiyosaki says savers are the new losers for that reason. Because if you just save, in other words, you take the money and put it into a savings account or put it under your mattress, you're actually losing money because the rate of inflation goes up faster than the small amount of interest you would get by just stuffing that into a savings account or some type of a savings program like a money market, right? So you
Yeah.
are literally losing money if you're doing that.
I
Scary.
also I would also make the argument that when you start investing or you start diving into it, you're going to want to learn more. You're going to want to figure out ways that you can control whatever you can when it comes to your hard-earned money. And education is going to be one of the best things you can do. And that's what I've noticed. Like, okay,
Yeah.
I've done this in my self-directed IRA. I want to learn more about it. What else can I do? Then you'll start to see the different avenues at which you can make money. You start networking with people. It opens doors for you, whereas saving, you're not doing anything other than, I don't know, losing money.
Right. Yeah. And in fact, what we were talking about earlier is step one of breaking away from the herd is to educate yourself on real estate investing. And I truly believe that is the very first thing you should do once you get this idea in your mind to decide you want to take it one step further. It's to begin to educate yourself. And as you said, Kevin, that will continue. It will lead to more education. Curiosity is your friend. Continue to be curious, and to educate yourself on things that will ultimately help you grow your wealth.
Yeah, and when it comes to education, try different things. Read books, but don't follow the path. Don't follow the herd, right? Just because somebody says, "Oh, you need to read all these books to get educated." That's not necessarily untrue, but it may not be the best way for you, best route for you. There are YouTube channels out there. There's our podcast. There's other podcasts. There's networking with people. There's so many avenues that you can find education that resonates best with you, and that is part of your financial journey, right? Your journey is your journey. So however it operates best for you is the path that you should go by.
Yeah, and we help people with this all the time. So we'd love it if you reached out to us. If you have questions, we'd love to share ideas with you, point you in the direction of some resources you could go check out. Part of what Kevin was just talking about in terms of educating yourself in a way that works for you is really understanding yourself, understanding your goals, and understanding what your investor identity is going to end up being. Now, we did an episode in the past on investor identity. It's a pretty popular episode of ours. And right now, Kevin and I are finishing up a tool that will help you establish your investor identity. We'll be making this available for free very soon. So stay tuned for details. That is coming soon. But that is a very important key to educating yourself and to taking step one is to start to understand yourself, know what your goals are, and make sure that what you're doing aligns to that.
And the reason we're so passionate about investor identity is because Adam and I struggled with that in the past. We tried to figure out how we can do that, how to figure out our investor identity. And we wanted to, being abundance mentality followers, share that with you. If we can help make your financial journey easier, or make it easier for you to attain your financial success, that's what we're trying to do. On top of that, we're creating this tool that we're using now because Adam and I are looking to graduate to doing something together, investing together. Think about tech guys who invest in some way, shape, or form, investing in something together. We will have more information for you in the future, but that's where our mindset is, and we're excited to bring all of you along with us on that journey.
Yeah, super excited to do that. One other thing that we'd like to let you know about it and kind of ask for your help on as listeners is give us your ideas, things that you're interested in hearing about in the future. We're going to be doing a Q&A episode pretty soon where we take questions that we've received from actual listeners and answering those on a show. So we'd love to hear more of those from others who we haven't heard from yet. If you have a question about anything investing related or what Kevin's favorite video game was, send those to us or get in contact with us. Hit us up on LinkedIn or email us, techguyswhoinvest@gmail.com, or go to our website, tgwipodcast.com, where you can get in touch with us. We'd love to hear from you.
Thanks, everybody.
That's it for this episode of Tech Guys Who Invest. This is Adam.
This is Kevin. Thank you so much for listening to this week's episode. Be sure to subscribe to the podcast for the latest episode updates and to receive additional investor insights to help you invest wisely and safely. You can join the TGWI Insiders community at tgwipodcast.com/subscribe. Lastly, we would love to connect with you. The best way to reach us is by sending us an email at techguyswhoinvest@gmail.com. Thanks, everybody.